The Fed just warned the markets could be in trouble again. So what happened? Rising inflation crashed the markets in 2022, and Jerome Powell warns it could happen again in 2026, which is why the Federal Reserve is keeping rates steady and taking a cautious wait-and-see approach. Also, Jerome Powell signaled that rising energy prices are becoming a serious risk for the economy. So what is the problem? Jerome Powell and the Federal Reserve are concerned that a spike in inflation could force them to raise interest rates, which could disrupt the stock market, impact parts of the economy, and potentially end the current rally in AI stocks. Jerome Powell warned that rising energy prices could push inflation more above the Fed 2% targets, which may force the Federal Reserve to raise interest rates further more current level. How does this impact the stock market? Higher borrowing costs can slow investor risk-taking and make safer assets like treasury bills more attractive, since much of the current market, especially AI growth, is driven by debt. The Federal Reserve tightening policy could cool the rally, which may help the economy long-term but hurt stocks in the short term. Are interest rate hikes in the cards? It's very difficult to predict what the Federal Reserve will do, as even its own members disagree and must react to changing economic conditions. However, if inflation rises again and rates are increased, it would likely be a negative for the stock market. Follow for more, and thanks for watching.